Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 16th day of July 2019, and this is the daily report for gold and silver. It was dollar strength that took the precious metals complex, with the exception of silver, to lower pricing. It was solid economic data that came out that pushed the dollar higher today. And that all in light of the extreme dovishness that we have seen recently with Fed statements, especially the testimony given last week by Chairman Powell. That being said, on an interim basis and long-term basis, I am still extremely bullish for gold. However, on a short-term basis, we do have solid support at $1,400. We'll have to see if that holds. I believe that it will. Let's take a look at our current price board. Traders, as you can see, gold did close lower on the day. It is currently fixed at $1407.60. That is a net decline of $5.90 on the day, 4.42% in terms of a decline. It did knock us out of our long trade. We had a very minimal amount of risk in there, about $7, and we will talk about that trade as well as our future expectations when we look at a couple of charts. In terms of the other precious metals, platinum only closed lower by about $1.80 at $843.60, and palladium got hit pretty hard, losing about $38.20. That's a net decline of almost 2.5%. But the shining star today absolutely was silver. Silver gaining 22 cents, and in the light of dollar strength, this is an exceptional move in the market, currently fixed at $15.58.5. And lastly, when we take a look at the dollar index, we can see the kind of move witnessed today, a gain of just over 0.5% on the dollar index. Traders, let's take a look at our charts. So traders, on today's show, I do want to look at both gold and silver. We're going to start with gold, a daily candlestick chart. We can easily see that over the last couple of days, we have had the market trade lower, meaning we've had red candles. And today, what is really different about that compared to the last, say, 3 trading days is these higher lows that we saw coming up until today. We did have a lower high yesterday, but for the most part, we have been staying within this compression triangle with a series of lower highs and higher lows. The low that came in today did come in right at the bottom of this channel, so to speak, and that low was 1402.10. We did get stopped out of our trade. We went long at 1416.30. We were stopped out at 1409.13. The total drawdown on the day in terms of the trade itself was $7.17, which amounts to $717 per contract. My sense with this trade was that I wanted to keep our stop very, very tight in case we didn't get that follow-through buying. It wasn't that aggressive of a trade, but we wanted to keep our risk very, very slight and minimal. Traders, my recommendation in terms of gold right now is to maintain a neutral stance, and we want to see how it reacts now that it is traded near the lower end of this compression triangle, because we are getting close to the apex. And realize that theory behind a compression triangle is that it can break to the downside or the upside. Typically, it will break to the prevalent trend direction, without a question of a doubt, is up. So I am still looking for an upside move. However, it is possible that we'll break down to the lower side. If we do, the next level we would look at would be about 1385. If we see an upside breakout, we would look to test and challenge these highs at $1,442. Traders, over the last couple of weeks, we have seen a sizable rise in terms of silver pricing, moving from approximately $15 per ounce to these highs today that were achieved just shy of $15.75 per ounce. And traders, really, if we take a longer term view of this market, we can see that over the last 8 weeks or 2 months, since this market bottomed at about $14.25 per ounce, we have seen a solid rise in silver pricing. We've had some very solid weeks, no doubt. So the question becomes, is this a long-term trend that just began to develop a couple of months ago, or something that will be short-lived? On a technical basis, you can see that I have one basic fib retracement. It starts from these highs at $17.70 down to these lows below $14 at $13.85, and we are coming up to the 50% or the 0.50 Fibonacci retracement. We can see that the high was just shy of that, and so here's what I believe. If we get a solid break in silver above 1577 on a closing basis, it will absolutely, I believe, come in and challenge these recent highs that came in at the beginning of the year at approximately 1625, just shy of that. So a break above this particular price point, call it 1577, would signal an additional 50-cent gain per ounce as we see the market go in and challenge those recent highs. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.